Hey, my name is Michael. I'm with the company backtothefuturetrading.com, and I'm one of the co-founders here. There I am. There he is. We've been around for almost 20 years now, and our whole modus operandi is predictive timing signals. Are markets predictive at all? Is there any justification to the idea that we might know in advance when a move is coming? That's what we're kind of here to flesh out together. And so it's going to take about an hour. We'll be done somewhere around 5 o'clock, 10 after 5, if that's okay. Anybody here for the first time today? If you are wondering if I'm flirting with you, I have a rapidly evolving acute hemifacial spasm, courtesy of, I believe, the COVID vaccine. And so if you see me doing this, I am not flirting with you. Please stop sending flowers in small letters. My wife said enough is enough. John, it's good to be here with you today. John, if you have markets that you want me to focus on or questions that you have, skepticism is not only welcome but encouraged here. There's a part of me that still sort of doesn't believe that this happens, but until it stops working, I'm going to continue to pursue it. Let's get straight into it here. We're basically talking about an idea that involves data mining. We send a piece of software, in this case, an indicator for NinjaTrader, back into the historical data. Cool, we're going to do ES rather, and look at GC on the times that we sent out. The market is looking, or the software rather, John, looks at thousands of historical data bars. And then it sort of asks the question, are there any times where moves are consistently going up and consistently going down? Does that concept make sense? Because if there are, then we can project those patterns into the future. I like to use the example of my UPS driver. And when we order a package Prime 2-day delivery, like say, what's today, Thursday? Say I order a 2-day delivery for Saturday. My driver, if it's on the truck, will be here between 10 o'clock and 10:30. Yeah, well, you're going to have fun today then. So John, the prediction based on his behavior patterns is that my box will be here between 10 and 10:30 on Saturday. So in that sense, it's not really a prediction. It's a behavior pattern that we're waiting for a recurrence over, a recurrence of, a repetition of something that's already been repeating, and we're watching to see if it will happen again. If you're as big a fan as I am of the movie Groundhog Day, there's a great scene that is in there, Groundhog Day, bank truck, where Bill Murray is sitting there and he's watching this bank truck that he's seen maybe thousands of times at that point. And he knows with precision when the truck is going to stop, when Felix is going to get out. Hello, Doris. Hello, Felix. Fix your bra strap. Got any change? Blah, 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 blah. And then he counts 3, 2, 1, and actually walks over, because he's seen this happen so many times over and over again. He can predict when there's a window to walk over and take the money. How many of you guys have seen that scene before in Groundhog Day? Well, that's the premise of today. And so when we asked a program to watch the E-mini S&P today, it had told us 2 days ago, today being FOMC day, it had told us 2 days ago, actually, yeah, 2 days ago, to watch for these times. So these were the established recurring behavior patterns. 718, 833, and all of the times on the top were recurring selling times. Believe it or not, they happened often enough as to create an established behavior pattern. And then, John, all of these times on the bottom were recurring buying patterns. So 2 days ago, the program went out like a dutiful algorithm and said, I'm going to see if I can warn Michael and all the other users on a 3-minute chart when the down moves are predicted to come and when the up moves are predicted to come. Now, John, how would we know if predictability worked? How would we know if it was a thing? Well, if we got to any of the sell times and the market rolled over this way, right, that would be a confirmation that the prediction was accurate, that the behavior pattern was in fact recurring. And if we got to any of the buy times and the market went up at any of those, we'd know pretty clearly, pretty quickly, if this method had legs or not. Now, let me just state before we look at them, 90% of people who see what I'm about to show you, recognizing the times were carved in stone 2 days ago, the directions were carved in stone 2 days ago. I've had no influence, especially FOMC and election day, to change them. Seeing what you're about to see, 85–90% of people still want nothing to do with this. And it's the one thing after nearly 20 years doing it and teaching it and showing people it that I still don't understand. Fundamentally, I think traders are, and I'll put myself in the category, damaged, broken, and crazy in some way to repeatedly run into a brick wall the way that is required to be any good at this. You got to be a little. But what I didn't realize was that a lot of people are super, and they like running into brick walls. Did you know that? There's a group of people that don't like to be profitable and don't want this to work. Because if it does work, John, they can't be surprised. They can't have the adrenaline rush of a win or a loss. They can't punish themselves in the market. And some people design trading to punish themselves inwardly, the same way a lady we knew would eat a sleeve of Chips Ahoy cookies just before she walked into a Weight Watchers meeting every week. There's a lot of weird stuff in trading. So when you see what happened today at these times, kind of analyze your initial reaction and be honest about the response you're having. Is this good news to you, or are you sad after the fact because it worked? So what I'm going to do real quick, John, just so you know that this is the same stuff. You see the 833 signal over here on the left? 833, 833. You see the 1542 sign over here and over here. So John, 739, 739, 833, 833. and then 1542. Can we agree rather, that the times I gave out 2 days ago are the times that we're referencing on the chart right now? It's important that I ask, because when people watch the video, they try to figure out somehow, some way, if I loaded the dice. Okay, cool. I have to be transparent. On my honor, I will do my best to do my duty to God and my country, to obey the scout law, to help other people at all times, to keep myself physically strong, mentally awake, and morally straight. Lots of years of Boy Scouts, they drilled it into us, be honest. Now, John, here's the 3-minute E-mini S&P chart for today. First reactions. Any reaction? Remember, what was today? FOMC. FOMC. Okay, now let's take a little bit of time just to kind of go through it one by one and see, was there any validity? Did the market push up at 948? Did it push down at 833? It kind of failed here, didn't it? It started going down, but then it went up. 739, 718, those are pre-market. Now here comes the market. 1021 goes straight up. 1106, straight up. 109, straight down. 203, John, this is the FOMC report. It's a retest of the bottom and it goes up. 227 shoots down until 251. 251 after the FOMC report shoots up to 342. 342 shoots exactly down to 4 o'clock. And now, John, it's off to the races from 4 o'clock to 7:51. We also have the 1206 signal here, which shoots straight up into 109. So, John, with the exception of, and even here, you see how it goes sideways for almost a half an hour, 50 minutes? Quincy goes, wow. Yeah, it's a little bananas. Isn't it a little bananas? What's going on? Okay, now, here's yesterday. Ready? This is 2 days in a row. So, Quincy, I'm going to go back to the chart. Same market. You said 1 minute ES, John, so I'm looking at the 3, which is the smaller of the two. And when we look at the 3 from yesterday, remember, added 2 days ago. Let's blow it up. I'm going to do the same thing just to validate, was this what was encoded into the screenshot? 827, 827, 106, 106, 651, 536, 536. So Quincy, John, same times that everybody had access to? Yep. Okay, so now look, this was election day, right? This is election day. There's no way to know when the markets are going to go up on election day. Or is there? It's kind of weird. It's kind of weird, right? Look at where the sell signals were. And John, what happens when we get to those times again? What happens when we order Amazon Prime with Warp? What happens when we get to the buy times, Quincy? Are they near the lows? How many of you smell rotten eggs right now? What I used to do when we first started this webinar, I would ask everybody a question. How many of you remember this question? The times that we were waiting for. Did the move occur when we were expecting it to 0 to 25% of the time? 25 to 50% of the time? 50 to 75% of the time? Or 75 to 100% of the time? Quincy, John, anybody else who wants to answer? I just want to get a quick summary. And while you're thinking about the answer, I'm going to ask, is it okay if I say that the times we were waiting for these moves were generally working 60 to 70% of the time, 6 to 7 times out of 10? Would that be okay? Or was anybody not happy with that answer? Because I want you to feel comfortable before we move forward and go deeper. Okay? Why don't I just say it's 60? Let's err on the side of caution. Let's be super, super conservative. What we're admitting together, if no one objects, and again, I'm open to rejection. I was raised with profound levels of Catholic guilt. No, John, that question is generally asking, when we got to 827, did it in fact go down? And when we got to 1003, did it in fact go up? That's what I'm asking. Very generalized question. You know what a good signal looks like in trading, right? You've bought enough garbage to know what a bad signal looks like. It prints after the fact. It prints 3 bars later. It's nowhere near the pivot, right? You know what junk is. So is it okay for me to say when we got to 1233, it went up as opposed to going down? And we can include that in our statistic. That's all I'm asking. Sure. Okay, cool. What we're admitting to, just so we're all on the same page here, what we're all doing together, we're pinky swearing together. We're starting a club. We're agreeing mutually that despite an FOMC report and despite a federal election for the president and all of the senators and congressmen whose seats were open and available, all the local districts, state levels, governors, with all of that going on, it appears that the people who have the power and the capital to move the market moved them, markets, at predictable times in the midst of what you and I perceived to be chaos. That's what you're admitting to. That's what we're saying is okay here today. We haven't even talked about trading signals today. We're just talking about raw information, right? We're talking about raw information. There were other markets today that we had times for. One of them was oil futures. Anybody trade oil futures? Because look, Quincy, are we in a 6 to 7 out of 10 window of accuracy in relation to when the time we were waiting for something to happen in oil arrived, the move occurred? When 1054 arrived today, 2 days after the signal, when 1130 arrived, did it go down? Yeah, there's a pivot. What happened at 12:09? 12:33 was a failure. 12:54 straight up. And then the pre-market was the same. 8:24 at the open of oil, 9 o'clock. And just before that, 8:57 and 8:06. What's going on here? Well, again, so there's no sleight of hand involved. CL, 3-minute, Thursday. Zoom in. Quincy, 10 o'clock, 10 o'clock. 11:30, 11:30. 12:33, 12:33. 9:36, 9:36. When were these added? 2 days ago. But we didn't know how much oil was in the tank beforehand. We weren't using satellite imagery to measure the shadows of the storage containers to estimate the percentage of fullness of those tanks all over the world. There's no way we could have known. And yet, when we go back in time on oil, what's happening at the times that we're waiting for things to happen? Like clockwork, no pun intended, look at what's happening at the times that the software is screaming at us to pay attention to. Now, at what point in here, let me ask and stop. Quincy, John, anyone else who's here new and skeptical, have I had any opportunity to interject or inject any of my guru knowledge yet? Is there any opportunity where I could use sleight of hand or neuro-linguistic processing to somehow wash your brain to thinking that what I'm showing you is better than it is somehow? Or are we simply looking at the times that were given out freely in advance and watching what happened after the fact? Just facts. And yet, when I show this to people week after week, month after month, almost 20 years now, the initial gut reaction is always fraudulent, fraudulent, fraudulent. People don't want to believe this is happening. It's a really fascinating element of human psychology. This was oil yesterday. This was oil for the presidential election. What time does oil open? Oil opens 9 o'clock. Let's draw the bar. Right here. So John, we were expecting, this is 2 days in a row, a down move from 518 to 645. John, there's a significant retracement at 645 pre-market, a down move at 730, 751 tries to hold, but it doesn't. There's a significant push down and pivot at 830. And now here's where stuff gets ridiculous. 912, markets open, ding, 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 ding. If you went long at 912 with what I call an aggressive counter trend trade, you just put a stop right under that candle. Watch. All the way up. We knew when that move was expected to end at 1024. That's a $1,700 move per contract. What's impressive, not the program. All the program did was find the behavior pattern. What's impressive is Goldman Sachs and JP Morgan don't think you're smart enough to see what's right under your nose. Where did the behavior time come from? A behavior pattern. Did you pay attention to the behavior pattern? Did you? And then, we'll get into it a little bit. Was there a significant retracement at 1024? Yes. Right here, you kind of lose, so no good at 1124. You finish where you started at 1215, and then the day kind of languishes. But as we go further and further backwards in time, look at the prior day. Quincy, is that still a 60 to 70% window? Mm-hmm. Let's go back and look at the prior day. Same stuff, right? The prior day. They don't care that you don't believe. They don't care that you don't believe. Now, John, you said you traded gold. These were, okay, so here's the Asia session through the US session today. Get rid of my giant Mr. Potato Head. And again, I'm reviewing it with you. I haven't seen some of these myself yet. Thursday, November 7th, plotted 2 days ago, gold 5-minute, 415, 415, 310, 310, 330, 330, 515, 515. Here we go. Now, what do we do with the signals? Quincy, there's a difference between looking at general signals, right? We got to a sell time and it went down. Yay! But what stop did we use? Where was our entry? Where was our target? Did we have a break even? How do we transmogrify raw data into a setup? Because if 100 people look at those signals, Quincy, 100 people are going to trade them 100 different ways. Right? So we need to make a leap from the setup, or the signal rather, to the setup. And what we did, again, before the markets opened on Wednesday, is we gave you guys rules. It says here, we'll also be showing how the signals can be traded by using one of two simple entry rules called signal with trend or the puncture trade. And there's an instructional video that describes what a signal with trend is and what a puncture is. And then I go so far as to tell you what the stop is going to be. Right? We want to be able to get to a place where we have the ability to backtest a signal. We want to have the ability to be able to backtest a signal. We want to get to this point. Let me show you over here on my other monitor. So, Quincy, this is a system. What's my entry? What's my exit? Did it win or did it lose next trade? This is for the E-mini S&P 3-minute chart, close to 1,000 executions. And we want to see, was it profitable? Did it have a positive expectancy? Because otherwise, it's just a feel-good webinar, right? It's just you and me going, oh, that's cool. It's like a magic trick. And you go back and trade the same way you always trade. And so that's a equity curve. Yeah. So Quincy, here's the rules that I gave everybody. Right? Number one, when we get to a signal, we're analyzing, John, what the trend is. And to use the trend filter, it's very simple. I use a 120 EMA for Thursdays. And in my live training room, I use a 20-period EMA. There's the 2 days of signals, Quincy. So when the moving average is up, John, I'm looking for buying signals. Does that make sense? Primarily. Let's go ahead and color the line white. So right off the bat, if you're going to trade, if you follow my social media stuff at all, you know you have to have rules. You have to remove discretion from the conversation. Without that, you're always going to make the wrong decision. You're going to allow your better demons to sneak in there and do some shady stuff, right? So now, when we get to those times, we're looking at the average true range, the ATR, Alpha Thomas Radio. And when the market is calm, the average true range or the average size of a 5-minute bar is small. When the market is excited, it's bigger. Lower risk, lower reward. Larger risk, larger reward. So this represents a 1.5 average true range. And that's a value in the software you can change. You want a number of ticks or a number of pips? Fine. So 1.5, we're going to enter on the close of the candle, enter at 6:05, and we're going to exit by the next time. 6 ticks. We're going to enter at the close of the candle. If it hits the stop, we're out. And we're going to exit at the next time. 81 ticks. We're going to enter at the close of 8:35 and exit by 9:35. 89 ticks. We're going to enter at the close of 10:55 and exit at 11:15. 2 ticks. Enter, exit, 0.6, 6 ticks. Enter, woo, almost hits the stop, negative 35 ticks. Coming into FOMC, enter, stop hit, negative 25 ticks. Enter, another loss, negative 35 ticks. So, John, did that make sense so far? We're using the trend to filter the time, so about half of those signals are being executed. We're setting a gap to see if it goes any farther than that, the time isn't working. And then we're establishing a window of execution. So we know in advance how long the trade is going to work. Pretty cool. Now, there's a second setup called a puncture. And the way a puncture works, it's actually pretty cool. Let me show you. When we have an uptrend and we get to a counter trend signal like 8:05, we can say, hey, we're monitoring this. We want it to go down, right? If we're using trend signals, boy, we don't want to take a counter trend time that's standing in front of the freight train. But what happens if the people who normally sell at 8:05 say, you know what, John, let's buy today. I don't want to sell my gold. I want to buy more. How would we know that that's maybe happening? Well, if it comes through the stop level, it's sort of a double negative. A failed counter trend signal equals a working trend signal. And so there's actually 2 trades in here. Now watch. The first time it comes through the blue line, my stop is under the candle that punctured the line. It immediately draws back, and I give up 21 ticks. We'll put it over here with the other losses. Then it comes back up through that level right above the blue line, second attempt, boom, plus 33 ticks. There's a puncture over here, and it actually is a loss of 10 ticks. Quincy, it's the violation of the stop of the counter trend signal. We've broken the counter trend signal, which means it's behaving more like a buy signal than a sell signal. Think of it like a breakout trade, only we're breaking out past the point of no return of the sell. Yeah, a violation of the time pattern. So here's a great way to think of this. Quincy, I order a new pair of sneakers from Amazon. They're really rare. People are having trouble getting them in stock. I'm there, 10 o'clock on my porch on Saturday. I look at my watch, 10:15. No UPS driver. Can't wait to get my new sneakers. 10:30 comes. 10:45 comes. 11 o'clock. He's never this late. He's never this late. The truck isn't coming today, is it? They didn't do what they usually do. Am I going to stand on my porch till 11 o'clock at night? He's going to be here, I swear. No, things changed. The violation of that behavior pattern now is the dominant thing. So now over here, I'm just going to do it real quick. Puncture, stop, minus 14, puncture, gain, plus 15. Let's continue forward. There's the next puncture, James, right here. Boom, boom, 106. So using a set of rules, I got to add this up in my head, or I'll use a calculator. Six plus 81 plus 89 plus 15 plus 2 plus 6 plus 106 minus 35 minus 25 minus 10 minus 35 minus 21 minus 14. That equals 165 ticks, or $1,650 hypothetical. I missed the 33 from the first one. I didn't add the 33 in. At least $1,600. Okay. How does everybody feel about that? See, there's a big difference between a feel good, wow, it went down 6 or 7 times out of 10. Ooh. When we apply a specific setup to the trade, now it makes more sense. Okay, so now Quincy asks a great question, right? This is a really good question. He says, do we always go to the next time, or do you take a certain amount of ticks? Fun fact. This is the most basic system that I can show you. So Quincy, my job now is to do 2 things. Remember, you're coming here. What's this guy? What is he talking about? What is he selling? He looks shady. Why does he keep winking at me? I told you it's a hemifacial spasm. I have to convince you that time is way more important than you're considering. But we have to put numbers to the signals. There are people who trade these way differently. But John, most of the customers that are making money with the program, right? We have a Skype group that we work with the customers in, and they share their ideas with each other, and they're in here showing their setups each day and telling people what they did and looking at their percentages. Most of the people that are trading in the direction of the trend, right? Most of the people that I've met who are profitable are generally looking for signals in the direction of the trend. So, John, can you see this one guy's chart here? He entered here and he exited here in the direction of the trend. So most of the customers that I've met that are making money, they're a valuable resource, right? That's one of the reasons why I love our Skype community. If you're an owner of the software and not an active member of our Skype community, you're really missing out on some of the best traders, I think, in the world. Those people will tell you, if you look at a big pool of them, what the easiest, simplest way to use the program is. You don't want to beat your head in with a hammer for the sake of it. So about 2/3 of the people are trading with the trend. So my job is then to take that back and sort of say to you, hey, this is a pretty simple way. And I'm showing you the most generic, basic form of that. Can you take 20 ticks and be done for the day with a daily goal? Sure. Can you only take punctures? Yes. Can you have a 10-tick stop and a 30-tick target? Sure. Can I put a Bollinger Band on top of that? Can I look at volume? Can I ask my dog Fred? Fred, what do you think? Fred's got a pretty good eye for futures. You can do what you want to do with it. I'm here to show you that the most basic, simple system that people are following as the first page made money when most people lost based on predictive signals. That's kind of my goal, if that makes sense. Yeah. The one that breaks everybody's heart is this chimichanga right here. This is the NASDAQ. And I want you to see something, because I think this is a super important point to make. Thursday, NQ 1 minute. So the signals for the NQ that are all the way over here, Quincy, they're as far away from 2 days ago as we can get. So these signals should be the least accurate of all of them. The farther away we get from the first post, you see what I'm trying to say, John? The farther away we get from that first post, the accuracy of this should go down, right? But the market that busts everybody's huevos, I won't really belabor the point. Look at what happened at the times we were waiting for 2 days ago. 251, 306. Go back and compare these times yourself. 340, 350, 4 o'clock, 614, 623. And now we're doing whatever's over here. Yeah, I'll show it. Some people still don't believe. There are the times. 323, 306, 340, 350, 4 o'clock. Ding. Now, it bears mentioning that I'm not the only guy who's thought of this stuff. I like to use this quote right here. This is Henry Ford. And Ford said, hey, I didn't invent anything new, but I looked at what other people did before me. And progress really happens when you look at what other people have kind of given you from the past and built on it. And here's the key: when all the factors that make for it are ready. So the guy who first figures this out is a man named William Delbert Gann. And Gann, he's arguing against these other guys. Elliott's like, it's all about structure. Wyckoff says it's all about volume. Gann goes, shh, it's all about time. Time wins. And he gives us the secret recipe for the software. He passes down the Colonel's recipe of secrets, herbs, and spices. And look what he says. He says, by studying the past records of the markets you trade, you will be able to prove for yourself that history does repeat. And if you know the past, you can do what? Tell the future. He's saying if you look at the behavior patterns that are occurring lately and you spot the ones that are significant and you project those forwards into the future, you're going to see the things we see. What's fascinating for me is here we are 100 and however many years later, 1908, 2008, that's 100, 2020, 116, almost 125 years later. The method still works. When they paid a man to follow Gann around and see how his predictions did, I want you to see something. Here. We have seen Gann in one day give 16 successive orders. Can we use the word predictions instead of orders here? We've seen Gann in one day give 16 predictions in the same market, 8 of which turned out to be at the top or bottom eighth of the swing. We can positively verify that this happened. So 120 years ago, when they were following the same method, which nobody believed, I'll show you that next, it's fascinating. Of the 16 predictions that he made, 8 of them turned out to be, they said, almost at the exact high or low. James, are you following me? John, Quincy, are you following me? No, that's 50%. But now watch. If you look at the NQ, 2 days after we gave you the signals, what percentage of the signals are within the low or the high of the move? See, this is what bakes my noodle. A 100 years later, we're super close to those highs and lows. So that sort of speaks to me and says, hey, this method still has legs. This method still has legs. So this morning, if you were trading the NQ, do you think you'd have made money on punctures and signals with trend from the open to lunchtime? You think your Apex account would have had a good day today? Top Step Trader, Earn to Trade, You Profit, Bolinox, whatever you maniacs are doing. Look at the pre-market. More of the predictive times. What if you just waited for some of those times, James, John, and you got long and you put a stop right underneath them? What if you just checked those signals? You'd have a lower win rate, but a much higher profit factor, right? Those are the signals from yesterday. The election yesterday. They're not all winners, but more than half of them are. And that bears out what we've been looking at for years and years and years. Our signals with trend from 2020, 4 years ago, 54% with a profit factor of 1.5. Asian session, 56% with a profit factor of 1.7. You take out Fridays, 1.5 with a win-loss ratio of 56. And it's still happening 4 years later on election day and FOMC day. Let's look at the day before. Same thing. Uptrends, let's find a downtrend. Does it do the same thing when it's downtrend? Uh-huh. So here's where it gets bananas. If you're trading NQ on a 5-minute chart, we can see the signals in the future. 1-minute chart, we can see the signals in the future. Where do you think I got them when we posted them? They're here. They're already here waiting for you. Different time frames. There's a 60-minute chart. We'll look at gold on a 60-minute chart. Earl, did you get what I think you got? It finally did the thing. Can you buy more cream cheese now? Yeah. We can go all the way out to a daily. It's not much different on a daily, is it? That raises some questions, doesn't it, Quincy? There appears to be a schedule that these guys are following. All I'm doing, let's see if this works. I tried to type in Bitcoin and we crashed NinjaTrader. That's the best. That's the best when you ask NinjaTrader to do something and it just goes, no. Oh, thanks for helping, guys. Give me 1 second. I was going to show you cryptocurrencies too. It works on stocks. Yeah, we can look at the YM, but it's going to be the same thing. It's going to be the same thing. All right, we'll leave cryptos out so we don't give Ninja a heart attack. Ah, okay. So YM, we'll take a look. This was the 5-minute chart today. And Quincy, I want you to see we already have the times for tomorrow ready to go. 8:45, 9:35, 10:50, 11:45, 12:35, 2:20, 3 o'clock. You mean you can trade and not have to sit and watch the screen all day? Mm-hmm. Here are the forecasts for oil. How many of you have ever seen the NinjaTrader live show that NinjaTrader has? There's a guy that's on there. I did a series of classes, and the guy who was on before me would come on and talk about energy and bonds and these things. I sent him all of these signals in advance. All of these. I have the email showing the chart that I sent him, all this stuff down here. And James, I said, I'll give you a copy of the program for free. I think we can work together. I'd love for you to see. Now look at what happened in oil. We literally called the bottom here, and I told him when to get in. He hasn't responded yet. I'm hounding him on email, texting, hey, what's going on? People don't want to believe. Anyway, YM. There's YM on the 5-minute chart today, Quincy. I have upset him with the facts. Here's YM. These are the times I gave you in advance for the Dow on a 3-minute chart. Is that what you wanted to see? FOMC day. Now, I'll make a suggestion here. How many of you see how they run the stops at the times that were projected? How many of you can see that they run the stops just before the times that I gave you 2 days ago? John, you see right here how they run the stops? If you ever ask yourself again, why are my stops getting hit right before it goes to the target? It's because you didn't have this. I don't know how else to tell you nicely. You didn't have this. There was a plan, and your part of the plan was to lose and create liquidity for the other side. Here's the Dow with the times from yesterday on election day. Right? Some of you aren't looking at 3-minute charts, you're looking at 1-minute charts. Here's what it would look like with 1-minute signals. Same thing. Half of those times, those signals are right near highs and lows, just like the guy who came before me when they interviewed him. Now, here's the sad part. Remember I told you 90% of people who saw our stuff walked away upset? We submit this article about Mr. Gann, 1909, in full recognition of the fact that in Wall Street, in trading, a man with a new idea, an idea which violates the traditions of the market and encourages a scientific view of the market, is not usually welcomed by the majority of traders. Well, why? For the reason that this man stimulates thinking and research. These activities, thinking and research, the majority of traders abhor, hate with a passion. Why aren't more people using these times? Because it violates the traditions and the normal way of looking at the markets, replaces it with a scientific view of the markets, and requires you to think for yourself. What is the plan for the market on a 30-minute chart for the Dow? Here are the times in the future. Well, that's impossible. What about GDP? What about unemployment? Michael, what about the price of rice in China? Can you tell me that? Here's a suggestion. Do you honestly believe that Jamie Dimon, JP Morgan, didn't know what the GDP was going to say when they ripped open that envelope? do you mean to tell me that the top traders at Goldman Sachs or Deutsche Bank had no clue what the unemployment report was going to say? That Vanna White, who was sworn to secrecy, she comes out with the unemployment report and she goes, 223,000, and everyone scrambles to their computer. Is that how it really works? John, that's the silliest thing you've said all webinar. I'm trying to figure out how to use. Are you serious? I have this elixir that you can pour on a wound and it heals it. And you're like, well, you know, I'm really into the scar culture. I got a box of Band-Aids back here, man. What am I going to do with these Band-Aids, Michael? I got bottles of Neosporin and Bacitracin. I don't want to know when these moves are. You're slowly sinking into the 90%, which is hilarious to me. I can't explain it. We started out today telling you I had no idea why people see it, understand they can know when the moves are coming. I've shown you the signals at least 60 to 70% of the time at the highs and lows. And people still sit there and go, yeah, but there was that one time it didn't work. And Michael, you don't understand. I also use a Bollinger Band. And then I also use the floor trader pivots on top of that. And then I'm watching the MACD for divergence as well. And I'm also looking at the RSI of the Woodies. You know, Woody was a great guy. My brother-in-law went to college with Woody, and I really love his system. And I'm just not sure how to integrate your stuff with that. These are the charts of most of the people that I meet. And to this day, I don't understand it. I just can't get to that point in my head where like this wasn't good enough. I don't understand, John. It's nothing personal. I don't mean to single you out, but I don't know what you mean by I don't know how to integrate the fact that 948 we were expecting it to go up. I didn't know how to integrate that 1106 we were expecting it to go up. I don't know how to integrate the 1206 signal where it went straight up. I don't know how to integrate the 203 signal and the 251 signal and the 4 o'clock signal. I just don't know what to do with those. I can expect it. John said you can't expect people to drop everything they've done to be profitable for this individual system. It's not a system. It's the operating system of the market. The operating system in Skype is all my stuff. He just has a Bollinger, he has a Keltner channel around it. And the other tool is a volume tool that I sell. It's 98% my system, my methods, my teachings. And the guy just comes in here day after day and posts his results and shares them with everybody. And then other people go on Trustpilot. 4.6. Time works, been using it for 4 months, and I have a 93% win rate this month on average of 10 trades a day, 115 trades this month with 6 losses. Carl's a real person. Carter, real person with a credit card receipt. I like Carter because he says I'm brilliant. Thank you, Carter. Venus. CJ. Stop looking and settling for the indicator that doesn't work, that's lagging. Everything you have is lagging. What I'm offering you is this. That's a very weird diagram. Here's what I know. Tomorrow when I wake up, I know the times in advance, which is proactive. I know where my stops will be. I know how long the move will last. I know when the longs are coming and when the shorts are coming, by your own admission, 60 to 70% of the time, minimum. And then to say that I can't expect you to drop everything and use this after you said 60 to 70% was okay, that sounds crazier to me than what you said to me. That's the Holy Grail. If it's not the Holy Grail, please show me what it is. Madoff had a better system. Enron had a really great system. Martha Stewart was swinging for the fences at one point there. You got to do some sketchy stuff to get better than that. It's okay. It's okay. Like I said, I come here for the Quincy's. About 10% of people, 10 out of 100, see it, understand what it means, and move forward. I'm here for those guys, and it's cool. But I want you to remember tomorrow when the move occurs that you could have known. Monday, Tuesday, Wednesday, Thursday. I have the times already. They're here. My job is to show up and push the button. And there's a group of people that are in here sharing their results with each other every day. This kid's 21 years old. He's just starting. Day after day after day. And they'll answer any question you have. Day after day after day. All right, that's enough of me convincing. The times are here. If you want to know, they're there. They're available for you. You can have them. If you don't want to know and you want to be surprised and you like what you got now, that's fine too. Time is the most important factor in determining market movements. By studying the past records of the stocks that you trade, you will be able to prove for yourself that history does repeat. By knowing the past, you can tell the future. By a study of the time periods and time cycles, you will learn why tops and bottoms are found at certain times. 100 and however many years ago, he stood up and he told the people around him what he knew, and the people that followed him went on to be successful, I believe. I'm going to stand up today and say the same thing, and the people that have ears to hear it and want to move forward and have it can have it, and the ones that don't need it, and that's fine too. The program that we're talking about is called Tachyon Warp. Whoops. Let's go to the home page. BackToTheFutureTrading.com is a play on pop culture. We nod to the cult classic Back to the Future movie because Marty went into the future, got the sports almanac, and knew the scores of the next 100 years or so of all the baseball, football games, and horse races. And so in our product store, the program that I've been showing you is called Tachyon Warp. It's our flagship product, the one that 98% of people kind of start and stop with. And so I'll put that link to the Warp page in your GoToWebinar chat box. And at the bottom of that page, you'll see a link to get started. Don't look at this price, there's a promo code. But if you click that orange button, I want you to see that we do in fact have a live training room. I teach it, and I show the signals that we show here on Thursday. I teach a very basic entry exit system with the signals and the trend. And then I add layers to it for those of you that want more confirmation or maybe look at it with a different angle. We meet from 9 to 11 Eastern time. I look at the ES, NQ. We look at oil and gold sometimes, whatever market you want me to watch, I don't mind. And we have a $200 a day daily goal per contract. I think we hit that today in the first 5 or 10 minutes of the open. And if you are a visual learner, you like having someone else talking while you're watching the markets, you realize trading is a lonely business. You can have the founder, one of the founders there with you, telling you how I would use the software in live markets. And today we caught some pretty good entries. How many of you were in the live room today? Thought we did good today? Good to see you. Okay, so yeah, if you want that, let me know or add it. If you don't want it, go to checkout without it. Hey, quick question. Can I touch base with you guys? Was I out of line the way I talked to John just now? Because he just wrote in and said that I was out of line. After the way you've spoken to me, I'm not sure if I'm going to purchase. Okay. Anyway, the promo code is WARPOFF. WARPOFF. And if you add that, it takes $500 off the price. It's a lifetime license for NinjaTrader 8. Comes with 2 computer licenses, video training archive available on the website, lifetime access to that. You have access to the Skype group where all the customers are meeting and sharing what they're doing and offering advice and asking questions. Trying to think what else. Lifetime updates. There's no yearly maintenance fee as of yet if you want to grab that. And yeah, that's all there is to say about that. Whew. I can be abrasive, but Bala, I showed live trading results. Tuesday, Wednesday, Thursday. These are people using the software. The reason I can be abrasive is because I've seen the other side. I've seen people use systems that worked for a week and then failed forever. I've seen people lose their homes, their jobs, their kids. I've seen people go to jail. I've seen divorces. I knew a couple who traded in their living room on either side of a 4x8 sheet of plywood. They took their life savings and traded it away in their living room. The wife had to go back to school. She was a special ed teacher, and her husband, who was a construction worker, drew his account down from $20,000 to $250, and he wouldn't go back to work. He told his wife, Paula, I can double my money every day. No trader on earth has ever doubled their money every day. He would be trading like Jesus or Muhammad, fill in Gautama, fill in your religious name there. After 20 years of watching this, when someone says, I don't know how I would fit this in, it's like a knitting needle in my skull. You can know tomorrow what the markets are likely to do. I'll write an apology email, I guess. Thank you for coming. I appreciate all of you. Thank you for the customers that are here today. Please consider joining our live training room that meets Tuesday, Wednesday, Thursday from 9 to 11. We'd love to have you. Keep your emails, inboxes open. We've got some exciting announcements coming before the end of the year. And again, if you're not in the Skype group, email either Rachel or myself. We'll be happy to send you an invitation to come in there and participate. May the wind be at your back. May the sun shine upon your faces. May the valleys rise up to meet you and the mountains lay low before you as you go on your journey. You may not believe it, but I am for you. I want the best for you. But on the other side of that coin, I understand the pitfalls and the dangers better than anyone. I have had an observation post for nearly a quarter of a century now and seen the highs and lows of the lives of the people that have come and gone. I've met two people who've lost between $3 and $3.5 million and were convinced, each of them, that it wasn't their fault, that it was just bad luck. You lose $3.5 million, it is not bad luck. There's something else going on here. I believe the people who move the markets have a plan. And if we just turn an algorithm loose on it, backed by 20 years, thousands of customers, and a 4.6 out of 5 Trustpilot rating, you could do a lot worse. And it might be worth bending what you're doing a little bit to watch for those times in the future. I love you guys. Thank you so much. If I was rough with you or coarse, I'm sorry. It's not coming from a bad place. I really do want the best for everyone here. And so apologies to John and anyone else who might have been offended by my tack. It was not intended. I'll talk to you guys soon. Have a great weekend. Welcome on board to those of you who are starting up with us today. Take care. Bye.